Actually, Matt, our view is that we think it's a myth that China is not investable, that China is inscrutable. We don't agree with that view. If you look at the largest, the mega cap names, the tech names that have been in the headlines since late 2020, we are focused less there. We're less focused on companies that are in the headlines every day, but we see plenty of opportunities to invest in China across sectors.
All right, what specifically do you like then in China? Of course, we've been focusing significantly on what's going on in the property space today, given, of course, those concerns that remain around a number of the big property names there. Of course, fears around contagion as well when it comes to what's going to transpire in the property space. Which camp do you sit in when it comes to whether or not there could be any further fallout the branches across the broader economy as a result of the property sector?
If we start where we see the biggest discrepancies between price and value, let's say in the short term, and for us, we define the short term as 2022. It's not tomorrow, next week, next month. That we can start in healthcare and life sciences, the biotech names. The concerns over pricing are more than reflected in what we see. We move to factory automation, companies that are involved in miniaturizing components, miniaturizing electronics for IoT, for 5G, for autonomous driving. We're seeing plenty of opportunities there. There are opportunities in the consumer space as well. China-focused, China-centric brands in public and private companies. So there's no shortage of opportunities, I would say, at least starting in those three areas.
Okay, let's dispel some of the other myths that, of course, you say are out there. One of them is that the Japanese market is not appealing. Clearly, you think otherwise?
We do think otherwise. Japan has been a strong source of alpha generation for us this year. We do expect that to continue as we head into 2022. If you stack up the positives of the Japanese market, the yen is weakening. It's materially weaker than it was this time last year, which helps the exporting companies, the world-facing companies that we see. Balance sheets are still rich with cash. There's a whole supply chain in Japan of companies that are enabling some of the technologies that we just discussed a little while ago, which is autonomous driving, IoT, 5G, advanced computing, quantum computing. So we see plenty of opportunity on a long-term view for Japan as well. And it's not just an international story. I should highlight there are plenty of domestic opportunities as well.
All right. We've got actually a few here on your list of myths that you want to, of course, debunk when it comes to investing in the markets. We are, of course, counting down to the start of trade in the Indian market as well. And a myth out there that you say is worth dispelling is that India is too expensive. We are seeing the Indian market, though, are we not, trading very close to record highs?
Yes. So multiples being high does not necessarily mean that the market is expensive. And I should reiterate that we invest not in the market, we invest in companies. And the companies that we are looking at across sectors, healthcare, manufacturing, as an extension of manufacturing, the automotive sector, we are still seeing plenty of opportunities there. Just for a moment, I'd like to contrast the opportunities that we're seeing in healthcare across North Asia and South Asia. In South Asia, it's more on the services and hospitals and on the healthcare delivery side, whereas in North Asia, you're seeing biotech, pharma, advanced computing driving drug delivery. But in India, healthcare is a very large and growing sector, broad and deep opportunities in manufacturing as well.